Hello traders, Gary Wagner here just before 11 o'clock in Honolulu, 4 o'clock in New York on Monday, 9th day of December 2013, and this is the daily report for gold and silver. We do have a moderate to moderately strong showing in the precious metals across the board, with gold trading up pretty much $10 on the day, 1240 and change, 1241, excuse me. And you've had a high today of 1244. We're just off those highs. We've had a low of 1226.60, currently trading roughly at 1241. We did send out a special trade alert. We talked about our stops being at 61. We have moved them to 51 right now, so we've moved them just to the top of this band of resistance right here. We'll lock in a little bit more profits. I also suggested, although, if you have multiple contracts, if you've been scaling in as you've been going short on that position, to lighten up and take some profits in this area. Whether or not we're going to see the market challenge the long-standing resistance that we have roughly at around 52 to 55 will be determined obviously at a later date, but I do think that we have really seen some sort of at least on a short-term basis, a potential bottom in the market. And right now we're looking to see whether or not there's enough steam to kind of push it back up into the 50s once more. Silver also with a nice showing, as you can see, trading at around 1986. The high has been 2010, the low has been 1940, and of course we suggested moving your stops, lowering your stops, of course, to about 2025 on our current silver trade. So what are we looking at in terms of pricing for gold and silver, both short, interim, and long term? Long term, I'm currently working on our 2014 forecast, and I have actually put part 1 and part 2 up on the website. I'm going to be sending you a link for that. And in essence, it's a setup for our forecast of 2014, and we're looking at a couple of different models. We'll talk about that as we get to some of our longer term charts. Right now, what I'm looking at is this. If I look at these last recent highs here, we obviously had a breakout above that, no question of a doubt. When we look at the longer resistance area, and I'm simply accounting for this high to this high, we did get a blip over on the last two, so it's not as really valid. And really what we want to look at right now is this one high that we have at 45, if the market's able to take that out, because you can see we attempted to take that particular price point out, but it is kind of softening right now, and I do believe that what we're seeing is some bargain hunting, but a lot of it I believe is short covering, as we're looking to do at the most appropriate place as we get closer and closer to the holidays. We are looking at a 720-minute chart. It is a line close chart that I've overlaid the study of a Japanese average chart. That's why you're seeing the black in there. And really what I'm looking for is whether or not we're going green or going red. You can see that we have just gone green here. And then, of course, I want to remove that study. We're now in straight Japanese average chart format. We can see that there's a couple of things that we see immediately. The first thing is that there's some real support at this 76% retracement, and it now appears as though there's real resistance at this 76% retracement. Realize the difference between these is not our starting point, but the tops that we're pegging it to. So it's trading within this band, and the question is it going to break up or break down? My sense is there's actually an opportunity for it to break up at this point, but we will absolutely have to see. The trend itself has been to the downside, but it's overdone at best. So when we look at the short-term study, this is that point I want to see if it can break above, because if it can, we might get a little rally, and that rally could take us possibly as high as 1260 to 1280. 1260 being a real key and a real critical area for the following reason. It's quite obvious to see where we have some resistance here, but 1257, in this area you have this low, but you also get these series of tops right here, so that's your next band of real resistance after this band. So the real resistance right now is at 1240, and then again at 1260. So trader, here's the key to my interim view right now of the marketplace itself. And what I think in terms of the way our current models might unfold, what has the highest probability of actually working out, so to speak. And what I'm looking at is this. We consider wave 3 and wave 4, and we are currently in wave 5. Absolutely in this wave 5, the only real strong count that I get is a 3 count right now. Typically you will get a 5 count on the way down. We'll get a rally here, a 4th, and then a final 5th. The question that I'm raising right now is at some point we will get a termination of this 5th wave. When it terminates, we'll go into an ABC correction in a bear market count, which means that we'll have a sizable rally. My sense right now is that the two ways that it can work out, we've talked about a standard Elliott wave 5 count will take this current wave 5 to a low that goes beyond the 1181. Where can it go beyond the 1181? Well, this particular target right here of 1154 to 61 to me is a logical place if it plays out like this. Wave 3, wave 4, wave 5, lower low. It could go as low as 1042, but I don't at this point particularly think we'll see the market really break below 1100. I think that we have come close to the lows, this 1181, but I think that we might in fact see the market have one more stab at this bottom number. The key right now is whether or not it's washed out enough of the marketplace right now, because we don't necessarily have matching lows. You have 1181 on this low of 3, and here our low has been 1211 if memory serves me. So we're still $30 shy. So there's definitely some wiggle room, so to speak, in the marketplace down in this particular area. And the other thing that I look at, this of course is a 3-day chart, but when you look at the moving average convergence and divergence, it spells lower pricing, just the way it's crossing where it's at. And in terms of this indicator, it tells me that we could be looking at some lower pricing. But the fact that we are close to this low warrants our attention to look at this model in a couple of different ways. And really the key is where will 5 terminate? Because my sense is that once we have a termination of this wave, we will go into that substantial ABC rally. Now traders realize this is a weekly chart in Japanese average format, so it's going to absolutely lag in terms of the color change. But it's also going to take out a good amount of noise so that when we look at this chart, because what I'm looking at it from a standpoint of doing a couple of things. This is our solid 4, and you can see you can't even see an ABC in there. 1, Japanese average, 2, it's a weekly. You can, though, make out a 1, 2, and 3. But when we look at the lows in this area, and you compare this low, this is the 1181, to where we're currently at, we in no way yet have that double bottom. What we do have is an indication on the weekly charts in the Japanese average format that this body size is getting smaller and it is getting close to a pivotal candle. Remember, as these markets tend to bottom or top, you will get these clusters of small-bodied candles just prior to the market going down. Here you're seeing it as a base being built, and then the market moves up, of course. So you'll get the cluster, or the other way is that as you get a trend, say for example this uptrend, look at the body sizes, they continue to grow or stay large, but then at the top you get these small bodies just before you get that transition. So what we want to look for, of course, as this marketplace comes down is those telltale signs that you will get as a market reverses and as you hit a pivot point. And we haven't really seen that as of yet. So we're not getting any kind of medium or long-term confirmation that we have in fact found some sort of a bottom in the market. We are getting it in our short-term studies, but not in our interim and longer-term studies. So that was the reason that I recommended lowering our stops as opposed to simply pulling profits. If there is some steam on the downside left, as we go in through the holidays and the end of the year, of course, I want to continue to ride that as long as we can. We have a comfortable position. At the same time, I don't want there to be a barrage of short covering as people pull profits, leaving us last place to come and grab our profit. So for that reason, I simply trailed the stop down as opposed to simply going in and taking profits. Now, of course, if you have multiple positions, it's a different story because you can pull and still keep some positions active. So that's really what I'm looking at. And as I said, I will be sending out a link at some time today so that you can watch the new chart this, and that has some of my more longer term sentiments in there currently. Now, as far as silver goes, here's what I find noteworthy in terms of observations of the market. Take a look at this sell-off as the market hits, $23 and sells all the way down to 19. If you look in standard candlestick, of course, daily charts, you can see there's a couple of green body candles, up days, but they're always followed by smaller bodied red candles or larger body red candles. You get a cluster here, but you really don't get any kind of signal that we could be seeing some sort of a potential bottom. But when we go to our daily chart and we take a look at this most recent bottom, this is that Three River Morningstar variation. However, following day it's not confirmed, but it's absolutely becoming confirmed now, because what we're getting is these highs that are now challenging these recent highs. A break above that really signals a good pivot or bottom formation. You can see these pivots when you get these variations off of Three River Morningstar in many, many instances. But what we're really looking at is these clusters and the small bodies themselves, like in here, to see if the market is going to try to build a base. But we're popping off of it at this point, and we've had a sustained market in which you're getting more than one green body, but it's moving to a higher high, and that's really what's significant as we look at this market today. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.